Hello, everyone. It is Noelle with Verivest, and today with me I have Mike Zlotnik from TF Management Group. Thanks so much for joining me today, Mike.
Hi, Noel. Thank you very much for having me on.
Yeah. So tell me a little bit about how you got to where you are today. What's your origin story, and what led you um, to here?
Sure. So I've been a real estate investor passively since 2000, and I realized this is my passion while I had another career in software development. To make long story short, 2009, I went real estate full time and started our first fund. We have since launched multiple funds with different strategies. And I started working with Fairway and Verivest from early days. I trying to remember, we originally got connected 2012 or 2013, and we've been one of the first Verivest clients on their platform. So on the fund administration side, we've been sort of exclusive with Verivest from the beginning. We're very familiar with the team, and we're happy to be working with Verivest. Um, what else? People call me also Big Mike. I'm known as the Big Mike, maybe because I'm 6'4", a little bit on the heavy side. But I go to a number of great masterminds. The whole idea of the Big Mike came as a result of a suggestion from the Collective Genius Mastermind, one of the masterminds. But to make long story short, I do have a podcast called Big Mike Fun Podcast, and people do call me Big Mike, and that's who I am. I live in Brooklyn, New York. Married happily to my lovely wife over 21 years. We have 4 kids and a cat, fifth child.
Wow, I love it. Awesome. It's nice to get to know you. Tell me a bit about how you source deal flow and what your acquisition strategy is.
Sure. So our entire acquisition strategy is relationship driven. That's all we do. We never take any cold business from the street. As I mentioned, I belong to a number of masterminds, and deal flow substantially comes from the sponsors and operators, kind of movers and shakers in the real estate industry through the masterminds. We also invest in a number of deals that Fairway brings forward. So the way to think about our funds, we are capital allocators, diversified funds, both Tempo Opportunity Fund and Tempo Growth Fund. Our flagship funds are well diversified. We're sort of funds of funds, the way to think about it. So what we offer is truly institutional level waterfall, well-diversified portfolio, and often we invest in, as I mentioned, a good amount of deals with Fairway themselves and a number of other sponsors who we've met through Fairway and outside through our relationships.
Awesome. You mentioned you're in Brooklyn. What key markets do you operate in, and why do you operate in them?
Sure. So we do invest some in New York City itself, but again, with the specialists who have a focus in, we invest with Eric Goodman, for example. He is a operator here in New York, distressed commercial debt. But we invest into many regions, sectors around the country. There is no specific region or country, so we invest with self-storage. We have investment in Fairway, value-add self-storage fund. We have investment in a number of other funds that are non-Fairway funds. So it's all driven based on the relationship. We always pick kind of a sponsor operator, the best product, try to negotiate the best deals, and then try to invest. We diversify them among many dimensions of diversification. So self-storage is one example, distressed debt, quite a bit in value-add multifamily, industrial, office. We have loans on land conversion or land permitting for cannabis cultivation. Again, the pot farms, as I call them. Couldn't call them anything else, but we're not into the pot investment, more of the land play. We have loans on some really interesting concepts where the sponsor invests in a niche. So we have a loan to the guys, discountlots.com. You can actually look them up. What do these guys do? They buy land for cash, and then they sell on seller financing. They don't transfer the title until the property pays off. It's almost like a land lease. They need expansion loan. We gave them expansion loan. What's really interesting is that we appreciate our relationship with Verivest. So when these guys came to me through the Collective Genius Mastermind and they asked, hey, we need some capital. I said, first thing you got to do is go to Verivest, get Verivest verified. So we actually leverage Verivest to help us with some of the background due diligence. Verivest verified them. We went through further underwriting. We wrote them a check because they're great guys, great product, and it was a good loan for us. So we're very creative, just relationship driven. That's the starting point. There's no specific region around the country. Where the great people operate, that's where we go.
Great. I love that. What is your investment philosophy and how do you determine a deal is worth doing or not?
So back to the similar concept, but I like how Warren Buffett thinks value investing. So whatever we invest in, we got to feel that it's a good investment. Obviously, we invest for growth, not just value. But we start again with people. Warren Buffett is all about three things: people, companies, and dollar amounts that he writes the check for. It's the same concept here, right? We start with people. Who are we investing with? Are we investing with the right people? Are they the right operator, high integrity? Are they capable? Do they have a good track record? Then we go into the deals themselves, right? So on the deal front, we obviously look at, does the deal make sense? How does it make money? What's the kind of the good, the bad, the ugly scenarios? What could happen if things don't go well? Does the deal have good downside protection or not? And it's okay if the deal doesn't have good downside protection. It just means it's a more speculative deal, and we need a higher return before we can, write the check. But at the end of the day, it's all about risk-adjusted return. We'll look at every deal, assess the risk, and then if it's a good risk-adjusted return, it's worth consideration. And then the final step in the process is how big of a check do we want to write into the deal? Can we use our relationship with the sponsor and the size of a check as a negotiation leverage to get better terms than what typically is offered? So we try to step on sponsors' toes without stepping on the toes. It's kind of trying to make it work. It has to make sense for both parties. So if the sponsor is good, if the deal is good, can we write a big enough check to get better terms, get a side letter or some kind of improvement? Sometimes we get it, sometimes we don't. And on the other side, can we manage that investment as a part of a diversification strategy? So we can't write the check that is too big because it'll hurt the diversification. On the other side, we don't want to write the check too small. So we have kind of a sweet spot today between $500,000 to $1 million. Obviously, we fluctuated up and down, and that's how this is sort of a sweet spot. Over time, as we manage more capital, the sweet spot will probably be somewhat bigger, but it's critically important as part of the diversification and portfolio theory is to know, what kind of checks do you want to write. So that's the high level.
Yeah. So you kind of touched on it a little bit, but leading into the next question, how do you generate value once your investment has been made, and then how to get a return on your capital? So like risk mitigation.
Sure. So we have a quarterly process. It's really pretty important once the investment takes place that we try to pick the best sponsors. Well, we like working with Fairways. They have great sponsors. They are great sponsors, essentially. They provide great updates and great statements. When we invest with non-Fairway sponsors, we literally develop the process to give them a Fairway process as an example. We show them what the good statements look like. We show them what a good update looks like. So we ask for quarterly P&L, balance sheet, cash flow statements, occupancy, economic and physical, a number of other questions to see how things are going. Some sponsors are great at updating it, some are not. So, and then we follow it up. We follow up proactively as far as what else we can do, how things are going. Do you need more capital? Do you need other help? Is there somebody we can introduce you to help your project? The same thing on the sale of a project or refi. Is there something we can do to help? So generally speaking, we are passive. With competent, great sponsors, we don't have to do a lot. There are sponsors that actually come out and they ask questions. In some cases, they help us. They ask, do you want to refi? Do you want to sell? What would you like to do, especially if we're a substantial investor in a deal? In addition to that, there are other strategic discussions that we can have with investments, with the sponsors and operators. What else you got? How can we help you? So we try to make it a relationship so they feel happy working with us and we feel happy working with them. And to our investors, we want to communicate confidence that we are taking good care of these investments. The world's not perfect. There can be problems and issues and so on and so forth. But we believe we have the right attitude and the right type of work ethic to monitor these investments and make sure that we can add value at every phase of the project.
Great. Yeah. Tell me a little bit about who the key players are that allow you to execute your acquisition strategy.
Sure. So as I mentioned, we work closely with Fairway. It's kind of a strange setup, but because we're a fund of funds, we like working with Fairway. It's a great relationship. They have great underwriting. So we execute that as part of the strategy. We piggyback, and at times they have a great deal, and the deal is too small for institutional players, and they don't want to take two mom and pop investors. So we are a perfect match. They come to us and they say, hey, here's a deal. We're raising $2 million equity. Do you want to write $1 million check? And if we like the deal, it becomes fairly easy. So they're absolutely key to our story, working with Fairway and Verivest. On the other side, my team, I have a small team. I have two guys named Yuri and Lilia. So for no particular reason, I didn't pick them based on a first name, I promise. It just happened. Like one of the guys, I worked with him in IT for many years, and the other guy, one of our investors in 2010 contacted me, said, my nephew is graduating Dartmouth College. This was 2010, and if you remember, the economy wasn't in great shape. He said he needs a job. Do you have a job? And I talked to him. I thought he was a great guy. He's been with me since 2010, and great guy. So he leads our in-house underwriting. From time to time, we'll outsource some work. So this is my team. It's a small team at this point. We do use external specialist consultants if we need to underwrite a deal in the self-storage and we don't have the experience and capacity. We actually have connections with the underwriters. They'll go look at the deal and give us feedback. So we use external consultants to help. But the key players, it's Yuri and Lilia and myself. We're a small team at this point.
Small and mighty. I love it. Awesome. Well, it was so good chatting with you today, and nice to meet you. And thanks so much for telling us about TF Management Group.
Thank you, Noel. Noel, I appreciate your time and your great questions and your wisdom, and happy to be working with Verivest and the family, and enjoy the journey. So thank you so much.
You too. Thank you so much. Bye.
Bye.